Yeah! Alrighty. Let me find where the music's coming from and maybe actually stop it. Yeah, there we go. So good morning, everybody. How are you doing? Hope you had a nice weekend. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey. Yum. Got my trader's cup. So, my name is Wayne McDonald. I'll be your guide today on this journey we call Forex, but we could do futures if you want. For sure, we're going to do futures. What do you want to do? Gold, oil? How about some crypto? You want to do some Bitcoin? How about dollar pairs, yen pairs? All that kind of stuff. Do you want to do some fundamental analysis? Do you want to do some implied volatility? Do you want to do some silver? Daniel says silver. Sure, for sure. So anyways, I've been doing this a while. Minimum of 20 years. Wrote a book. Won some awards. Been on TV. Hey, I was quoted in the Wall Street Journal. Wasn't that neat? Yeah. I could tell you I was on vacation in California. My phone rings and it's the Wall Street Journal. And they're like, do you have time? Do you have time for an interview? I'm like, okay, let me go to the other room. So anyways, cool. I know macroeconomics, management, and finance. That's cool. Studied all that. Neato. I've also worked for the government of South Korea and the Australian government. Yeah. Yeah, I love suits. Yeah. Wore a suit there. So anyways, cool. Look, I used to have brown hair. My kids don't even know that. Isn't that funny? Yeah. So anywho, why do we bring all this up? Look, I can help, man. I've made a lot of mistakes and I've learned a lot of things, figured a couple of things out. And now I use TRADARS to automate all the grunt work of trading so that I can make the big boy decisions. I could be a boss. So anyways, fundamental analysis, technical analysis, all automated now. Yep. So I already went through all this with our team. An hour ago. So I'm not going to spend too much time on this, but Bitcoin's coming down. We're below 91,000. Dollar is stronger or above 110. Uh-oh. So you're going to be a bull or a bear on the stock market? Don't know. We had a question about silver. Well, what about gold? Gold is coming down. We were, 2750. Now we're below 2700. Oil's Oscar Mike. And yields are cray on the 10 and the 2. So we looked at all of that already. Just a heads up. Typically, we would review, all that ghee I drank. Wowzer. Oh, hey, Ron. Normally we do the COT on Mondays, the Commitment of Traders Report, released by the CFTC. But because of the holidays last week, or in this case, the day of Memorial, it's delayed till Tuesday. But normally we would look at the change in capital stock and the change in capital flow. But that data is not out till tomorrow. So just a heads up on that. Oh, wait, before we go there, I was going to do the calendar. Let's do the scalping calendar. That's the one that matters. So we got PPI tomorrow, CPI Wednesday, right? And oh, look at that. How interesting. Oh, here it is. Retail sales Thursday. Yeah. So good. Those are the big ones. Now we have a couple of data points this week out of the UK. CPI on Wednesday, and then retail sales, and then jobs, right? All of that's what's going to consume our week. So you might want to look at pound this week and dollar as well. Now, if you look at the main calendar, because that's 6 events in 2 countries, you're like, Wayne, dude, there's a lot more going on than just that. Right? You're like, Wayne. There's hundreds of things going on. Right? Look at all this stuff. Look at all this stuff, Wayne. Look at all this stuff. Wayne, look at all this stuff. What do you mean there's only 6 things that are important? Yeah. Okay. I've only gotten to Thursday. Look at that. Just crazy amounts of data, right? So what's tradable? What's not tradable? Well, you want the volatility. You want the market to move. But you also want really reliable, repeatable patterns, don't you? And so our scalping calendar combines both. So it looked at, let's say, the 100 or so events that are on the calendar this week, and it said these 6 are important, nothing else. In fact, it's only retail, UK jobs is next week. So it's only like this one event on Friday, this one event on Thursday, 2 events on Wednesday, and there's an event tomorrow. Nothing else is worth your time as far as event-driven strategies. Cool. Isn't that neat? Yeah, it's totally neat. And of course, we plot. Look at no scalps. If it comes out less than 0.3, no scalps. Well, I guess you could throw in Kiwi dollar there, but yeah, very few. So there's really, well, I guess there's here. Maybe. But see, I think even though that's what's happened in the past, that might not actually be the direction. So you still have to think a little bit. If the number comes out big, that's more strength. So typically, like what this is showing you, let's talk out loud. If PPI was big, it shows the economy is doing well. And in that scenario, US dollar tends to weaken. So, that's where you're like, well, euro dollar normally goes up, pound dollar normally goes up, Kiwi dollar normally goes up. But we're in sort of a reverse psychology right now where if we get a bigger number, that makes the Fed less likely to cut. And that may not be the same, but at least we know what has happened in the past. And you should know fundamentally what we're doing now and be able to do some comparative analysis. But, we have the data is all I'm saying. Fantastic. So we still know those events are there. And also imagine you were a dollar bull, and maybe this event, if it came out 0.4, maybe this event does create short-term dollar weakness, but then we flip around and buy it all back. So you're still in a sell a rip scenario. Cool. Just take a look at the market here. Anything going on in Forex above 75%? No, not really. Let's do crypto. Anything above 75? Breakdown, down, down, down. Looks like dollar strength even against crypto. Good to know. What about the indices? nothing major going on indices. Individual stocks, just Alibaba. Like, yeah, not a lot going on at the moment. So here's our implied volatility. You should be using this at market opens. You're already a little bit late. Okay. But you can see, according to implied volatility analysis, you really should be focused on, like, if you're trading the S&P 500, somewhere between 6 a.m. and 7 a.m., you should be getting your game on. Amateurs tend to just show up at the market open, right? And they're like, I only trade at between 9 and 10. Yeah, after you've missed everything. Okay? Yeah. So, for example, the vol's been up, and then, okay, that's what I would do if I were me, if I was a bear. That's why I asked you if you were a bull or a bear, risk on or risk off. And let's see what you said. And by the way, thank you for participating in the poll. I appreciate that. Risk off 64. Yeah. So for y'all, it would look something like that. Would be your morning plan, wouldn't it? Yeah. What do you stink? Smell like a plan? Cool. So you start with all your strategy. Okay. And then you need execution. So TRADARS is for strategy. Execution is done through Trader's Way. It's an ECN. You want an ECN. Find yourself an ECN. I recommend Trader's Way. You can start there. Do your own due diligence. You're a big kid now. You can do your own due diligence. But the trust is you need an ECN. Straight through processing. No one is messing with your trades. Okay? That's what you want. Okay? So Google Forex ECN and check them out, but start with Trader's Way. And then you take Trader's Way and you have TRADARS. And so now you have both strategy and tactics. You also need some performance coaching like this. So I already did an hour. We've already reviewed fundamentals today. Okay. Jessica has already led the stock market open for today. So, right? Look at this. Jessica also led. Oops. Jessica, oh, what's it doing? My mouse is freaking out. Here we go. So Jessica led a session at 3 o'clock in the morning. Then I did one at 7 o'clock in the morning. I guess that's 2 o'clock in the morning. Well, about 3 probably. And then I did one here and then here. So there's already been 3 performance coaching sessions this morning. Now I'm doing this one, which is, we can count as 4. Then there's a stop looking correct at 11, which is the 5th one of the day. And then I'm doing one at 4 o'clock. So 6. 6 performance coaching sessions today. And that doesn't even count the one I did last night, or there were 2 yesterday on Sunday. Okay, and you can do that by, you can go to the past. See? Sunday and Sunday. Isn't that cool? Yeah, cool. So anyways, there's a little TRADARS for you. Cool. And don't forget the courses, huh? Oh, that reminds me. We have a stock trading course. I made it for the Council of Investment Advisors, which meets later this morning. I think it's more than 12 hours long, but I don't remember because we did it a year and a half ago. So I got an idea to re-release the recording of really what it is it's not a stock picking course. It's a portfolio construction and management course. So it's not just picking stocks, but it's actually how to be a professional investor. Like I said, it's at least 12 hours if I remember correctly. Might be 8, could be 14. I don't know. But I thought I'd do an encore release of it so that you can watch the recordings. And then I thought once the recordings have been made available and watched, that I add 2 or 3 more hours of training. So we add some lessons to it. And those would be live. Would anybody be into something like that? Anybody here want to watch 12 hours of portfolio construction and management training? Similar to like what we did here in the oil course. No? All right, then I won't waste my time on it. Cool. All right. So let's go back. La la la. La la la. La 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 la. Take a look at some technicals. Yeah, great course. Yeah, and I think for some that have never been exposed to that kind of training, I mean, it's a game changer on the way to look at risk and performance analysis, right? I might have to grab another coffee. It's already made. All right, so let's take a look at what we got here. Let's turn on all commodities. Commodities are red hot right now. You know what? Somebody asked about that, so let's do it. So I got everything turned on, right? Everything's turned on. All patterns. So yeah, let's just start fresh. All patterns, all assets. Was that right, Maida? I mean, you know, yeah. It's one of those things like, I just don't have the time to do it if it's 2 people, but if it's 10, I mean, yeah. Time is an issue for me. Yeah. Yeah, always. But I worked out today. Yeah, can you imagine? From around 4:44 to 5:44 a.m. I worked out. Can you imagine? Yeah. Wait, so what was I going to do? Course. Oh, technical, sorry. All right, let me zoom in a little bit for the so it's a little easier to see on the tube. With Trump going into office and the dollar being strong, what's going to happen? Dude, I just did a 2-hour presentation on that. Right? Yeah. How funny. Yeah, you should probably sign up for the annual outlook. I think there's a link in the description below. All right, pound yen, right? Well, I think you'll find, Mike, that I'm always calm. But anyways, pound yen. So you have to decide first, are you a buyer or seller of this pair, regardless of anything? Don't look at the little arrow. Are you a buyer of the pound yen or a seller? And when you answer this, I'm going to assume you could create a PowerPoint slide and you can convince me technically and fundamentally that you're right. Yes, I did meditate. So from 5:45 to about 6:10, I meditated. Yes. Good, right? Good. All right. Yeah. So a seller. Yeah. So you wouldn't, this pattern has nothing to do with that decision is what I'm trying to say, right, Abdul? Right? Like, irregardless of anything we're about to look at, if you don't know if you're a buyer or a seller, that is the number one reason you're failing. You don't even know what to do. You're looking at the charts to do it, which means you want the thing to happen and then you're going to do it. But it already happened. Why are you selling? Because I see a bunch of red candles. So, like, for example, what does this big move mean? We're probably going to hit some profit taking. Does it mean buy? No. See, you need to understand how to trade. If you're like, well, this is falling, so it's going to continue falling. Really? Who taught you how to trade? That's not how you trade. Right? For example, at least have a basic level of price action knowledge, right? And if it dropped like a ton of bricks, okay, then what? Okay. Well, you're supposed to be selling like these pullbacks. So that's a plan A, plan B, and plan C is too far away to even consider. So don't be shocked if it goes up, right? Like, for example, a basic Fibonacci play. You guys understand Fibonacci, right? So you're going to measure from this top to this bottom. Okay, 382, 50%, and 618. Something like that. So what's the general theory of engagement here? Oh, it's bearish, so you want it to go up. That's where amateurs make mistakes. They're like, wait. You're bearish, so you want it to go up? Yeah. I want it to go up so I can sell it. Okay, so our plan here is, let's say something like this. So yeah, there was a big movement. That always makes me laugh. There is a big movement. So what's the next thing? What's the next likely thing to happen? Besides a second cup of coffee, right? Up, so you can sell it. And you're like, well, doesn't a big down move mean a future down move? Yeah. But if you sold it now, you're a knucklehead. You're selling it because it already dropped. Where were you earlier? Right? Like, think about this move, right? It dropped like a ton of bricks. Up, take it down, sell it off of 162. So anyways, going back to this, if I was a bear, okay, how would I interpret this? It's going to go up and then down. Is that my prediction? No. I didn't predict jack. In fact, I don't really trade harmonic patterns. But does that make them invalid? No. What would Wayne do in this situation? I would have sold at B. Now, am I concerned that if C holds, it'll make a higher high, higher low? Yeah, I am concerned, but it hasn't necessarily done it. This is a potential pattern. And of course, I wouldn't have known that at B. I just would have sold it at B with an assumption that C is going to be lower than A. But if it failed, then we have the potential for a Gartley pattern. And to me, that's just a 3-wave pullback on the hourly, or a pullback to a 4-hour moving average, like the 4-hour 5. So there's no prediction here. This is not a signal, okay? Okay? I'm sure if you want a signal, someone will promise you to make you rich for $50 a month. Yeah, they're going to make you rich for $50 a month. That's amazing. Or stupid. I don't know. Your call. It's either amazing or stupid. You decide, right? So anyway, there could be up and then down. Maybe a false rally on this. Great. But nonetheless, I would hope B leads to a lower C. All right, but if it doesn't, then you got yourself a Gartley, and now you know that you can continue to sell the higher high. You see? So what is this? Plan A, Plan B. You guys getting it? It's gorgeous, isn't it? Gorgeous. Okay. All right, cool. All right. So, Swissy and Yen, am I bullish or bearish on this? Don't look at the pattern. Just tell me. Am I a bull or a bear? By the way, if you don't know these patterns, there's a free download in the link below the video. And there's no sales pitch, there's no follow-up, there's no funnel to get you to buy crap. It just gives you the the download. That's it. You sign up, it gives you the download. We're done. Okay. Anybody else? Am I a bull or a bear? Type in a question mark if you have no idea. Well, Lucas is correct. I don't want to trade this at all. They're both funding pairs. You got it. Lucas, you nailed it. All right. Okay. Cool. So, CAD Yen, am I a bull or a bear? Well, TRADARS emailed me 2 hours ago and said I should not only be a bear, but I should be more bearish because overnight while I was sleeping, the trend got even more bearish technically. Just the technicals. Fundamentals were already bearish, but now I am more bearish because the technicals have lined up. Oh, wait. I had a fundamental analyst give me a morning report when I woke up and said, hey, boss, guess what? CAD Yen is more bearish than it was last night. Good morning. An opportunity awaits. Oh, 2 hours ago, right while I was meditating, my machine was watching the market for me while I meditated. Cool. Then I have a technical analyst who works for me. This is my fundamental analyst. Okay. To get to this score, looked at productivity, jobs, inflation, interest rate differentials, institutional positioning, retail positioning, technical trends. All of that is, seasonality. All of that was done by my fundamental analyst. My technical analyst said, hey boss, 39 minutes ago on the 30-minute CAD yen chart, there is a down channel. Dude, my fundamental analyst told me 2 hours I need to get bearish. Maybe I should consider this. So what do you stink? Smell like a plan? So now my technical analyst and my fundamental analyst, who don't even sit in the same part of the office, they don't know each other, they don't talk to each other. But they both say, oh, look at this. It already updated 40 minutes ago, just updated. See, it's all live. I didn't refresh the page. Hey, boss, look for an opportunity. Now, is it an opportunity? Well, this pattern, okay, down channel, exhibits weakness, and I want to be a bear. The next leg, and that's all this down arrow means. The next leg, it's not a signal. The next leg in this pattern, if this pattern continues, and the pattern is a down channel, then the next leg is down. So that's an opportunity. Whoa! Whoa! And the interesting thing is I can do this while I sleep. And I'm not even joking. I can do it while I sleep or meditate because I never turn my back on the market. I have machines do all the heavy lifting for me. Samuel, how do you think the fires in California will impact the market? Not at all. Okay. Emerald says, considering Bank of Japan hike next meeting. No, we already know that. We've had that plotted for 4 or 5 months already. So it's not like now the yen is getting strong because of that. No, not at all. Okay? No. Cool. So, what about this Aussie yen? Should I sell it? It's bearish, right? Should I sell this? Okay, so it's falling, so it's weakness. So is this pattern an opportunity or a threat? We know it's weakness. It's a threat. This pattern suggests on the 30-minute that you need to be careful that the next leg down fails and the next leg and the next move is up. So if I were me, I'd say, really, why? Why is that pattern developing? And you might open up and find maybe there's a daily pivot zone, weekly pivot zone, monthly pivot zone, annual pivot zone. There's something there. So you can say, well, I'm not interested because I want to sell that, but that's a reversal pattern. Or maybe you'll say, okay, it'll reverse on the 30-minute, go up for a day. So we have a big bullish day on Aussie yen that slams into a daily moving average in which you would sell because you're a bear. Cool. So either way, if you're a bear, you want it to rise so you can sell it on a higher time frame and stay short for a month. How do you know to do stuff like that? Well, if you don't know how to do that, you don't know how to trade, and therein lies your problem. Okay, so for example, we can take a look and see what's up. Okay. Yeah, it's bearish, bro. We're at 96.55. Worst case scenario, sell a pullback to 97. Sell the pullback at 97. Yeah. Okay. So look at all the things that we're analyzing to make this fundamental decision. Okay. Okay. It's a lot, right? I know, right? Yep. So, institutional investors, 75% of them are short. Yen is 50-50. Whoa! So think of it this way. Just let's break it down into one thing. Why the heck would you buy Aussie dollar when 75% of institutional investors like hedge funds are shorting Aussie? And you want to buy it and trade against the entire institutional market? Is that really what you want to do? That's your thing. Okay? Now, very often in a decent market conditions, okay, we are long this asset. Okay, that would be normal, but apparently something abnormal is going on, because when we look here, clearly this is bearish, technically. Okay, technically. And you can double check that over here and do some linear projections. Remember, this is not a chart. This is statistical analysis. Does anybody want to lead us through the math? Anybody mathy here? Yeah, I'm part of a team now that has a mathy person on it. And it was great because we went mathy. It's great to go suddenly mathy and doing all the math. Yeah, y equals mx plus b. Yeah. Now, why do we care about that? So let's talk about the why and not the how to do the math. Let's talk about what the math means. The M, okay, the M is the slope of the average price over time. That's the average price, changing average, 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 average. And if you continue that into the future, so let me do it this way. Now I'll add as an arrow. If you're going to predict the future, if the variables don't change, like the rate of changes stays the same, then you can project into the future will be at that price. So now it's a linear projection, but you need to know the slope. Okay. So what's this other nonsense? And why is it important? Type in a question mark if you're not sure. In particular, if you want me to tell you. Because now you have this data, but if you don't understand the data, it's not going to help you. Okay? Okay? Yeah, you need to know this stuff. You're like, Wayne, I already know how to do technical analysis. I don't need to know this stuff. I'm like, oh, so you know how to drive a Prius, so now you can fly a jet. Huh. Well, good for you. I'm not sure if I agree. Okay, so now you got the average here. How far above the average does price tend to deviate? Another way of describing it is how much does price vary from the average price? And what we're also trying to figure out is how far is the biggest variance before it returns back. Okay, so you do all these calculations. And you want to do it above and below because you want to know, all variations from the mean. Okay. So what we're showing is even when it tends to go up or even up a lot, it tends to go back to the average, which is bearish. Because this is what we're interested in, not the up. Okay, but these numbers are huge, but ultimately what we're interested in is it goes back. Okay? So it maintains bearishness. So we call that variance, and we want to standardize it now. So it's kind of like saying, well, what's the average variance before it falls? So let's just pretend it's like, well, you know, the distance from here to here, add them together, divide by 2, and you're going to get, you know, something like that average distance. I can see it's actually less than that now. Okay. And so what you do is you take this variance and then you standardize it so it'd be above and below. So, right? And that equals your standard deviation. And so now we've standardized, we've just standardized these moves away from the average. And we've standardized it. So now we know usually how on sort of kind of like on average when price moves away from the mean, how high it goes before it reverts back to the mean. Or how, right? Or the acceleration down when it speeds up. Now we don't have many samples in this data set, although I think it's looking a little further left. Okay. So now we have this deviation. So we've standardized. So think of these arrows as the new standard deviation. And then we go back to the first part of the formula to say, well, that's the deviation, but it should continue in the direction of the slope of the mean. Now, why is this important? Well, two things. One, you are a bear. That's it. Because the rise over the run is a negative integer. Okay. The second thing is, you know how far price tends to move away, deviate from the average before reverting back to the average. And then we project that forward using the M, the rise over the run. And so now you got your, if you were a bear, you don't want big pullbacks. So that's your worst case scenario, but you're still a bear. Your base case is we just stay on the average. Okay? And B star, we'll call it, is your best case scenario. an acceleration which would increase the negative slope of the mean. So, right? And then you can then get the price for that. But in this case, what you're looking at is on average, we've analyzed it, and this chart looks like this. Now, from this point on, let me do this in pink. This is where we are now. So everything to the left of that has happened. And everything to the right is a projection if nothing of the variables change. If we maintain the same rate of change and direction, based on the past, we can come up with a sort of a rough deviation, standardized, right? And we're probably more likely to go to the top end. So now I'd say, well, am I going to expect best case scenario? No, probably not. So I would be conservative and say, well, I expect something more like this. Okay. But you can see in the past, so this would be normal. And this is abnormal, but it happened and it's in our calculations. So fundamentally, we're very bearish. Okay? This very bearish has nothing to do with this chart. Well, only one part of it has to do with this chart. And so this tool is available so you can say, well, this week I wouldn't be shocked. Okay, and this is you talking now, not me. You wouldn't be shocked to see a pullback to around 97 and then a continue. Well, that's my mouse. Okay, a pullback to 97 and a continuation down. Statistically, that wouldn't be a shocker to you. Now, you still want to do technical analysis, so you're like, well, this would be an interesting pullback to a roll reversal, which is not quite, it's above 97, but it's somewhere near 97. And also, if you were going to be selling the daily 21, okay, that could be projected out too. So you could even take this a little bit further. I'm going to do this and go even a little bit further here and say, wouldn't it be interesting if you have the down, the up, the down, the up, and down? So now I'm thinking not just today, tomorrow, but the rest of the week. But there's no way in hell I'm going to buy this. Oh, but what if I see a bunch of green candles? You do you, bro. Okay? Don't go chasing green candles. Please stick to the rivers and the lakes that you used to. I know that you'll trade Forex or nothing at all, but I think you're moving too fast. Rest in peace, Left Eye Lopez. All right, I think I'm done. We looked at implied volatility. We looked at some fundamentals. We looked at some technicals. We used the back tester. We looked at this, that, and the other thing. And I burned up some time. Yeah. But I think an hour-ish, 45 minutes is enough. If you need more, well, there's a whole army of performance coaches at traders.com, as well as everything that you've seen today and more. I already did gold earlier today, comps. So I recommend everybody join traders.com. I think the coupon code is still working if you want the discount code. Yeah. Roderick got that one, huh? A little TLC in the morning. Okay. I think I'll leave you with this. I think if you go here, let me see if it's still working. I don't even know. And then I got to jump, babe. Come on. There we go. I think it's working. Let's see. You get started. Join Pro. New year 25, I think. NY25. And you hit apply. And yeah. So you'll save $600 a year, $50 a month. If you quit, the coupon code will not work a second time. So you can't go and come back and go and come back. Piss off. Okay. Cool. All right. So you're the best. I love you, babe. That was real. Peace on earth. May the pips be with you. May your profits be above average. Don't forget, get yourself an ECN. Do it right. Build some infrastructure to your successful small institutional Forex trading business. Smell you later, dog.